Hello traders and welcome to the channel once again. So today we are going to be looking at what or analyzing the charts for the coming week. So to start with, we are going to analyze what the DXY. Currently, if you look at what DXY, you can see that market is what not really giving us what any clearer what move. Market was bearish, but as market goes to this particular, we had what a strong or what an impulsive what bearish move from here. But currently, market is what consolidating without giving any what clear what direction. All right, but considering this particular zone, if we go back a little bit further, we can see that market got to what a key level, which we have another block around this particular zone. All right, we have another block around that particular zone. And once market go to that particular point, we are seeing what, or we can see that market was making what multiple rejection. All right, multiple rejection at the zone, making this particular zone what more of a support zone. All right, holding price from going downward further. So if we are considering this now, let's say that market is what we are having what a support. Now we have a support zone around this zone. We are having a support zone. We already know that market is reacting from what another block. All right, we had a liquidity sweep. We had a liquidity sweep. And also, when we pay attention to what price action over here, this is a pin bar. We have a pin bar market, all right? We have a pin bar over here. So price action what tells what is actually happening, which is a sign of what a reversal. All right, this is a reversal pattern. So we had a pin bar, all right, sweeping liquidity on the support zone where market is reacting from what the other block. And then we are seeing what a break of structure around this particular point. So if we are seeing a break of structure around this particular point, and then markets then react on this particular hot order block. Also, when market got to this point, we can see that there was first a rejection. All right, this bearish candle had a wick, which was almost about 40% of what's the entire candle. And then we had what an indecision candle formed, and also market is reversing from it was the second time. So if we pay attention to price over here, price is actually trying to what go bullish from this particular point. Now let's go down to what our daily and let's see. All right, so when you go to the daily time frame, now we can see it more clearer that we have what a break of structure from this point, and then an order block when we refine it from this point as well. And market is what reversing. As you can see that market is trying to form a bullish candle from that particular point. So we may see, or we may see that price may go upwards from this particular point. We have a gap, an unfilled gap as well at the top. So DXY is a little bit it's a little bit what bullish or trying to go bullish from this particular point. But then we also need to pay attention that we are just in an accumulation phase of the market, and market hasn't what's giving a clear move. We're having a bearish market over here. So depending on what market will do, that will give us what a clearer confirmation. We can as well have market markets going downwards as well. Now let's look at this, looking at what the Wycliffe methodology. All right, so when we look at the Wycliffe methodology, all right, we have a market what the spring taking liquidity from the SD what phase over here. And then we retested. We had a retest on the support zone. And then our last point of what support, which is where the order block was formed, that market is what reacting from. But then we've had a bullish, an impulsive move, and market has what reversed backwards, taking what liquidity from this area. Now market is what back within what's the within the resistance zone. So depending on what the market does at this point, either breaks this point and go upwards, or market will just retest the resistance and then reverse backward. But I am personally looking at what's a bullish market considering the other factors over here. So that is it on DXY. Now let's go on to gold and analyze gold as well. So when we come on to gold or looking at gold price action, we were having what a very impulsive what move. If we are considering our major structures, there was so much of what impulsive move on gold around this particular what zone. But then we have gold reacting at this particular hot zone. All right, at this particular zone, we had a break and retest from this where the impulsive move happened again, and then market then went up, and we have this drop from the ongoing war. All right, we have this drop, but as market came down over here, we still had what a retest. We still have market retesting that particular point. All right, and then an impulsive move. So this current zone is also more of what a support zone. All right, it's all more of what a support zone. So now what we are going to do is that we look for a point of interest where markets can react from. All right, so if we are considering what our point of interest, this whole zone is what an order block. This whole zone is an order block, but the order block is too big for us to what consider for trade. So we switch to our lower time frame. When you go to the daily to refine this order block properly, we can see that there was a break of structure. There was what a break of structure from here. Market broke structure from here. And then we have, so when you talk about order block, we are talking about the last opposite candle, right, that caused an impulsive move. And over here, we are seeing several what impulsive move. This is the last one that caused what an impulsive move. The entire range over here, all right, the entire range is what we call the order flow, but it's too big for you to consider for what? For a trade. All right, so this is what our order block. And as you can see, when markets go to that zone, we have what market going upwards from that particular point. That is our 4-hour time frame. So now we refine it downwards again to have what a clearer trade or a clearer view of the market. So now we have our order block over here. We have our order block over here. And then markets what? Market then broke structure. All right. Or there was a shift of what? A shift in market structure. If we pay attention to the zone as well, we can see that there is a chart pattern what formation on that particular zone. All right. There is a chart pattern formation, which is what our head and shoulder pattern, giving you what another confirmation that's giving us what a further confirmation. So market then retested to that particular zone where we have what the other block. So now gold is looking bullish from this point. So all we need on gold is what? Our point of interest for a trade. So we have it's supposed to be market structure shift, but then anyhow that makes you understand it is quite cool. And then we had what? Our order block. We had another block that causes what this impulsive move and also break structure over here. Also, after the change of character, we are seeing what? This point being broken. So now let's go to our 15 or 30 minutes and let's see. All right. So when you go to the 15 minutes for our entry, where we are going to have what our minor structures, this zone can become, or this zone becomes what our entry for the trade. So that is it on gold. All right. So on gold, we can then look out for buys. We can look out for buys on gold from here to this particular what point that may be our expectation on gold. Now let's also go and check on let's check on Euro USD. So Euro USD. So when we go to Euro USD, let me clear everything. All right, always with top-down analysis, we like, or I like to start with what our, to start with the weekly time frame. So on our weekly time frame, we saw that Euro USD was actually bullish, and currently we are also seeing what an accumulation around this particular zone, an accumulation around this particular zone. If we switch, or if we go back a little bit, we can see that we had market reacting from this particular block over here. So it's a kind of what a supply zone over there. So we can also see that Euro USD created what a structure break around this particular point. If we switch down to our daily time frame, that will be what more clearer. So we had markets reacting from what our higher time frame point of interest, which is what from the weekly, we had a liquidity sweep around this area. And then we are having what a change of character. We had a change of what character also around this area. Now on Friday, so on Friday we had markets reacting to this particular block before market close. So now we are back to our lower time frame to look for what entry. So if we are looking for entry on what Euro USD, so we have a change of character around this point. We then look out for markets to go back or pull back a little to a zone. Then we look for the entry. So market reacted to this other block. We had what another block being mitigated from here. and also an inducement being taken. Market sweep and inducement around this zone. So if you go down to our 1 hour time frame for entry, we can see that we are having a fair valued gap around this zone. So this become our point of interest on Euro USD. We can see that we have imbalance below that market hasn't filled. So we will be combining Euro USD and DXY. We can see that there is a little bit of correlation over here as well. So we can look for another short on Euro USD. Also, we will look at, or let's also take a look at GBP CAD. So looking at GBP CAD, same thing, we had a very, very bullish market. We had a very, very bullish market. We were having a very, very bullish market, and then we started seeing a reversal from here. All right, if we are considering our major structures, we map our major structures to determine our direction properly. So these are our major structures over here on this particular trade. So looking at the major structures on this particular trade, we were having market reacting to this particular support zone. So if you look at major structures, we could see that we have a change of character, market changing character from this particular zone. This particular move failed to break structure from here. We had a break of structure. We were having a break of structure, and also a break of structure over here. But this particular point did not break structure, and then we had market coming down, and this one being broken from this point. So we have a change of character around this zone, showing us that the current direction is bearish. All right, the current direction is bearish. But don't forget that we have the support zone. So if we get this market, if we get markets coming downwards from this point to then break the support zone to act like a resistance, then we can or we may see more of a downside movement on this particular asset. All right, so support and resistance zone are more of a key level for me. So let's go to the daily time frame and let's see. So when we come to the daily time frame, just as we are analyzing, we saw that market reacted to this particular order block, causing this change of character at this zone, which caused this change of character at this particular zone. And then we had a pullback to this particular point. All right, we had a pullback to this particular point over here. And then market started reversing from. So now all that we are looking for is our point of interest for the trade. So now we are currently having an accumulation around this zone. So in terms of support and supply and demand, we have what we call we have the rally base rally. We have a rally, a base, and a rally. All right, that is supply and demand, and also we have the drop base what drop. So if we look at this particular leg over here, we can see that we are having what a drop. Market is now forming what a base, and then we can have what a drop. So with this method, or with this supply and demand method, all right, the top of the base acts like what a resistance zone. It acts as what a resistance zone. All right, then market what breaks out. So if we get a breakout, from what the base, the breakout can then become your entry. The breakout can then become what your entry for what for the trade, and then we target what the low. So now we are having what a drop, our first drop. Now we are having a base. We see that if we go to the 4-hour time frame, we could see that around the base there was what an order block that market what reacted to. All right, there was an order block that market reacted to. We are having a lot of liquidity below. We are having what a lot of liquidity around this particular what area. So on GBPCAD, we can expect market to what to come down. We are having a whole lot of, we can expect market to come down all the way from this particular zone to the zone over here, or this zone can become your entry, or you can also expect you can also expect what you can also wait for the breakout, and once market breakout of the zone, you can then look at for your trade. Let's add another one last trade, one last analysis. All right, let's analyze GBPUSD. So when we consider GBPUSD, we go to our higher time frame. All right, on our higher time frame, we look at for our major structures to determine the direction of what of the market, and also key levels. So there was impulsive or strong but impulsive move. We were having what an impulsive move all around this point. So that is GBP USD. And also we pay attention if market is reacting from any key level. All right, so this was where markets rejected from. This was the zone that market rejected from. This looks more of what a crash mono pattern. If market has reacted from this point, this would have been a more valid. But then we are seeing market rejecting from this particular point, which isn't a bad trade. So now all that we are seeing is this on what GBP USD. Now this zone then becomes what our key level, or this zone becomes a key level, because markets came down to the zone and still rejected back again. So we go down, or when we go down to our daily time frame, we can also see on our daily time frame. So on our daily time frame, we had markets what got into this point, and then we had what the rejection from that particular point. So on GBP USD, if we consider our market, or if we are looking at the market structures over here at this particular zone, or if we are looking at this particular range over here, there is kind of equal highs and equal lows formation. All right, making this particular trade or this particular asset what market is what just ranging. There is a range around what this point. So either market will go upwards and break structure, or market what will reverse. So what we can then do on GBP USD is that when we go down to our 4-hour time frame, or our external structures, we have what zone break, and we have market reacting from this order block. So on our 4-hour time frame, we had market reacting from this what order block, and then we had what price breaking structure. We had a breakup structure from here. We are having what a liquidity. We are having a liquidity below. We are having a liquidity below. We still had another what external structure what break from this particular zone. All right, and we are still having a so we have what point of interest. This becomes our what a point of interest, and also this becomes what a point of interest, because this move also caused a break of what structure. We are having equal lows. We are having equal lows. So on GBPUSD, we will just be expecting market to either react towards this one, react from this point and then go upwards, or market will just what come downwards to this point before we see another impulsive leg. So this is what these are some of the pairs that we are going to be looking out for the coming week as well. The rest of the trade will be shared into the Telegram channel. If you are not in the Telegram channel, or if you are new to our channel, please kindly like and subscribe to the channel, and also check in the description to join our Telegram community, so that you will get access to every technical analysis that we are going to be providing. Thank you for watching.